Tenaga saw a boost in its earnings for the 3 months ended November 30 last year due to higher sales of electricity and forex gain. Net profit increased 24% to 2.15 billion ringgit from 1.74 billion a year ago, while its revenue climbed 3% to 11.61 billion from 11.24 billion last year. Its President and Chief Asman Mohamad says the higher net profit was mainly due to favourable forex translation, which was boosted by the stronger ringgit. He adds that this indicates positive macroeconomic development in Malaysia, which benefits TNB in terms of electricity demand. Although its OPEX increased 6.3% to 9.66 billion ringgit, it says the imbalanced cost pass-through mechanism has shielded the group from fluctuation in fuel prices. The utility giant expects electricity demand growth to be stable, in line with positive economic outlook for Malaysia. Affin Hwang Investment Bank says Alliance Bank and RHB Bank are among the clear-cut winners after BNM's rate hike. This is due to the bank's current and savings account ratio and variable rate loan portfolio. Alliance Bank leads the pack with 90% variable rate loans and 35.3% CASA ratio. It is entirely domestic-centric, while RHB Bank has 82.5% variable rate loan portfolio and 27% CASA ratio. Also on the investment banks list are Maybank, Public Bank and Hong Leong Bank. CIMB Investment also says that Alliance could be the biggest beneficiary of the rate hike, followed by RHB. It estimates that the hike could raise Alliance's FY19 net profit by about 8.2%, while RHB's earning could improve by about 6%. Dagang Nexchange, or DNex, has acquired 2 consulting and accounting system services companies to strengthen its IT and e-services expertise. Its only owned unit, Dagang Net Technologies, bought a 51% share in Genesis Group for 10 million ringgit. The deal gives it a direct equity interest of 60% in Innovation Associates Consulting, or IAC. Genesis is a consulting firm that delivers a training and consulting services in transformation initiatives. Its clients include the Custom Department, CIMB, and Lembaga Tabung Haji. Meanwhile, IAC is a consulting firm which has completed over 100 projects in the public and private sectors. Samsul Husin, who is both DNex's Executive Deputy Chairman and Dagang Net's Executive Chairman, says the company expects the consulting and accounting services know-how gained via the acquisition to extend beyond trade facilitation to other verticals as well. DNex's shares closed unchanged today at 50 cents. AirAsia and AirAsia X released preliminary operating stats today. A look first at AirAsia, the budget carrier flew 17% more passengers in its 4th quarter. That's 10.44 million passengers versus 8.9 million a year earlier. This is due to a 16% increase in its seat capacity. Load factor improved 1 percentage point to 88%. For the whole of 2017, AirAsia carried a record number of passengers, transporting 39.09 million passengers, an 11% increase compared with 2016. Full-year load factor was 88%, up from 87% in the previous year, while capacity rose 10% year-on-year. Meanwhile, AirAsia X says it carried a total of 1.55 million passengers in the 4th quarter, up 12% year-on-year. Load factor grew 2 percentage points to 83%, while capacity went up by 10%. For 2017 as a whole, total passengers carried jumped 25% to 5.84 million passengers. Load factor rose 3 percentage points to 82%, capacity was up 21%. AirAsia shares continued their uptrend today, closing at a record high of 4 ringgit and 29 cents. AAX jumped 10% to close at 43.5 cents. The Federation of Malaysian Manufacturers wants the current minimum wage maintained, at least in the medium term. This, as the industry grapples with hefty increases in the costs of doing business. They have been called to raise minimum wage in Peninsular Malaysia from 1,000 ringgit to 1,500. But FMM argues such a hike would be excessive compared with the government's more reasonable and gradual increase of 100 ringgit or 10% in July 2016. It also believes that minimum wage at 1,500 is too high a basic wage, and that plus allowances and bonuses, the move would force companies to restructure, including possible job cuts. FMM says that the more important focus is to ensure wages are in tandem with productivity growth, as well as differences in cost of living and economic activity between states and zones.